Let's start.
Sure. Is it okay if I share my screen?
Yeah.
All right. Just
Can somebody please let him share?
He should be able to share.
Perfect.
Yeah, I have been able to.
Awesome.
Correct.
Hey, good man. Hey, by the way, like I'm so glad you did something. This is a very useful one. So
yeah. So the very first one, I mean, I had
Bull
to
Run Ventures.
full ratchet a bunch of times. So this was the given category, and then here are my attempts at doing the weighted average, the full ratchet, and if all VCs had full ratchet.
Okay.
So
the full ratchet ka understood, right? So what do you think full ratchet means conceptually?
Protection against dilution in terms of share of ownership, percentage of ownership.
Basically saying that if there's a down round, the value of my investment should not go down.
Correct.
Which means that bull run has to be given enough number of shares so that they still have $60 million of value, right? Meaning, although the share price has gone down, right? Or there is a share price which is given by that 5 million investment. Right? That's there. So the 105 will give you some share price.
But would it be based on the value of investment or the percentage of ownership then? So if bull run owns it,
full ratchet means you protecting the value of the investment. That's what it means. You have assumed it to be protection of ownership.
Correct.
That's why I asked you.
Yeah, that's what I was saying.
It's so not protection of percentage. It is protection of the value of the investment.
Right.
Which means that if you invested at $250 million, let's say you invested $60 million here, 240, whatever, you still feel that after the next round, your investment still should be worth $60 million. That's what they want to say.
Understood.
So you are given extra shares, okay, and also higher percentage ownership correspondingly, so that the value of your investment remains at 60 million. Is everybody okay, or like am I doing something wrong, or everybody agrees? We are preserving the value in full ratchet. Okay. Anybody has a doubt on this? This is very important, guys. I mean, this is actually something that most of you will encounter. Not because your fund would have given a high valuation, but somebody would have given a high valuation at some point, right?
Correct.
And then many of the companies will have a flat round or a down round, maybe 10% down, right? So anti-dilution will be hit. So what does full ratchet mean? Has anybody seen a full ratchet clause, by the way, recent times? No, right? Yeah, no, go to your sheet. Yeah, it was a good sheet. Okay, has anybody seen weighted average?
Yeah.
Okay, guys. So anybody wants to tell me what is weighted average apart from Arnav? What are you trying to do conceptually in weighted average? At a broad level, what are you trying to achieve with weighted average anti-dilution? Anybody? There's nobody volunteers, I don't move ahead, right? I mean,
so Anand, if I may like to give it a try. So basically, if let's say the one round happens where they raise 100 million, the round before that is 10 million. So basically, if let's say the company then sells out for 55 million, then 1:10 ratio will happen. So
no, it's not sell out. It's a next round funding scenario. Nobody's selling. Selling, the situation of selling is described in liquidation preference. Here we're talking about next round of funding, which is a down round, which is at lower price than the previous round. Like Series C is priced lower than Series B.
So essentially, then in the weight of how much value they put in, they will essentially get more shares if there's a down round, so that their total value that they had invested is preserved. So if let's say the company is at 240.
Okay, fair enough. Anybody else want to take another take? What is the objective of weighted average anti-dilution? So what is the objective of anti-dilution in general? Yeah, इतना तो पता होगा यार, that's good. What is the objective of anti-dilution?
that you maintain the value of the money that you'd put in a sense, if there is a rather
get compensated if there is a drop in the value in the next round. Get some compensation.
Yes.
Right. Okay. So weighted average tries to do a weighted average of your entry price, okay, and the new price weighted to the respective amounts. You had a 60 million round at 240, and somebody is putting just $5 million at 100. The dilution is only 5%, right? I mean, you can't say that, thoda sa paisa kam bhav pe aaya, that's all, right? So maybe you had a 5% dilution at a lower price. That's all you had. It's not like the company sold at a lower price. It is entirely possible that a Series C is a down round, but Series D is again more than Series B price, right? So the next round in this particular company, right? Let's say the sliding now syndicate is a smart syndicate. Let's say the next round is $500 million, right? So just for the temporary dip, you can't penalize a lot, because these are companies. Prices can go up, prices can go down. So you do a minor adjustment depending on the dilution and the amount of investment that happened at that low price. So you're trying to weigh down. Full ratchet means ki, if it goes down, I will be fully compensated. I will never, in any subsequent round, I will never lose value on my investment. That is full ratchet. Okay. Guys, I mean, there is a spreadsheet. Shruti is prepared. And broadly, so if you do full ratchet the way we are looking at it, it sort of means that, hey, sorry, there was one more sheet, right, Shruti?
Yeah. Do you want me to share the screen maybe?
Yeah, if you can share yours. Lost here. So the impact in full ratchet, okay, you can look at the sheet, try to understand. Impact of full ratchet is that the guy goes from 25% up towards 42% or 43%. Like a big impact on everybody else. Now the others also dilute towards this full ratchet because their entry price was probably less than 100. So they don't get the benefit. Okay. But this guy gains significantly. And this is just for a temporary drop, which is why the preferred method has been the weighted average. In weighted average scenario, if you see, it dilutes a little bit, but maybe practically doesn't dilute enough, right? I mean, the others are diluting by much higher percentage than this guy, Bull Run Venture. Right? It's sort of stuck at 25 to 25. If there was no anti-dilution, this would have gone to 23 point something, 23.75. Right? Ashita, you haven't done anything, right? Any of the exercises? Okay. Okay, guys, who's done the next one? Okay, we'll share the sheet with you. Please take a look. Okay, guys, anybody's tried Tap House? Anybody's tried? I'm not saying anybody's solved. If you tried it, most likely you will solve it. Anybody's tried it? Okay, what do you think about the problem? Is it like a likely scenario, not like a likely scenario? Common, uncommon? I heard somebody give a small cry. So is that the answer, or बच्चा रो रहा था कोई? Guys, help me here. What do you think about the problem? Okay, let me just project the problem here, and you guys can look at it. Because I'm assuming that. Okay, can you see the problem now? Sorry, this one. Can you see this? Take a few minutes to read this. Okay. So how many layers are there? सबसे पहले बंदे ने एक एग्जिस्टिंग इन्वेस्टर से 10% जो ओनर है उससे एक एडिशनल 500K का कन्वर्टेबल ले रखा है at a discount of 25%. There's a convertible. Then this guy goes and gets one term sheet for a $2 million at 15% equity. This $2 million for 15% will give you the pre-money of the company, and you can determine. This is the most important part. The first line, $2 million for 15% will give you the pre-money of the company, right? You can determine the share price or whatever. Right? This is the most anchor thing. Then the second investor wants to join the round at the same pre-money. He said, I will take the same terms. Does this mean that both of them will get 15% equity or not? What does it mean? The second guy joining at the same pre-money, what is the impact? Anybody? Will they get the same pre-money or not?
But he's joining at a premium of 25%. So the pre-money will
be. Sorry, will they get both 15% or lower equity? What do they get?
If they put in the same amount, the investor too will get lower equity, lower.
No, they put he wants same equity. Either equal equity 15% or lower. That's the question.
You'll have to put in more
conceptually,
money.
Think about it. Think about it conceptually. Okay, let's do another exercise, right? Let's say you raise $2 million for 20%. What is the pre-money here? Anybody knows? तू रहने दे प्रतीक यार और लोगों को बोलने दे तेरे को आता है सब. What is the pre-money if you're raising 2 million at 20%?
8 million.
8 million भाई. Thank you अभिषेक. तो अगर ये दो इन्वेस्टर एक और आता है कि भाई यही प्री मनी पे मेरे को भी 2 मिलियन डालना है, तो 2 और 2 4 मिलियन हो गए. 2 and 2 4 million dollars at the same pre money of 8 million. How much equity will each guy get now?
16%.
Please your
16%.
16 point something. Yeah. Perfect. Okay. Any other answer? This sort of accurate, but may not be accurate. Any other answer? Is it 20% each? तो पहले वाले को 20 बोला तो मुझे भी 20 मिलना चाहिए ना. Why will both not get 20%? Anybody wants to answer? I see some new names. Guneet Basin.
Due to increase in the round size.
Rupali?
Because the post money has increased now that more capital is.
Yeah, post money has gone to what? 12.
12.
So how will you calculate the equity of each person?
12.
2 million by 12%.
2 by 12.
4 by 12, right? No.
4 by 12 is the total round size. That's the total dilution, but split between two people. You're right. 4 by 12 is the right number, but for both the investors, right?
Yes.
Okay. Are we there? Okay. Now let's come back to this. So we'll try to solve this problem in a few steps. The first step we'll do, and I'll show you a sheet. Okay. So first we are simply going to calculate. So by the way, typically when a founder forms a company, how many shares does he have usually? Anybody can answer? Just a trivia question.
10,000.
Very good. Yeah. कौन बोला ये?
Sahil this side.
Very good. Yeah. Very good answer by the way, because most founders, the minimum amount to taken to invest in a company to form a private limited company is 1 lakh rupees with 10,000 shares. That's the most common number you will encounter. Okay. In India. So we assume that this is the original cap table. Founders ESOP 10%, existing investor 10%. I have assumed here ESOP at 10. You could assume it to be 5. Right? But I've just assumed to 10% original tha, which is very common again. Everybody with me on this? So I have given 50% equity to the new guy for $2 million, and I found out the dollar per share price. Everybody with me in this spreadsheet? I have said to give him 15% equity. I need to give him 1765 shares, which is 15% of the total now, new total. And if 2 million gives you 1765 shares, the price per share is 1133. Everybody with me? Just assuming only this situation. Guys, this is the time to ask a question. If you don't understand this, the next one will become like, Come on. Nobody has a question. I can't be so good. Okay. So now in this, I have added the layer number 2, which is the existing guy has a convertible. Because as soon as the first guy gives a term sheet, you have to incorporate in the first term sheet itself, you have to incorporate the existing convertible. Like Shruti will be like jumping up and down कि मेरा convertible नहीं है term sheet के अंदर included नहीं है 20% discount है तो वो डलवा ही देगी वो term sheet के पहले डलवा देगी वो because this guy has to sign. Okay, so here I have tried to put basically said I have found a new share price. What did I do? I said the previous share price, which is in this cell, is cut less 25%, 1 minus 25. You see the number there. Okay, so less 25. The share price is changing. I'll tell you why it's changing. So there's a 25% less share price of the existing investor. At this 800 ka price, he's putting $500,000. So this is the number of shares he gets. Now the first guy saying, "Ki boss, for example, if I stuck to this 1765, sorry, what is the number here? 1765. If I stuck to 1765 here, and I issue new shares at this new price, okay, 20% less, then what's happening is this guy is going to 14.3. He'll say, no, bhai, मेरा term sheet 15 का है, मेरे को 15 चाहिए ना. तो हम लोगों ने क्या किया? We manually increase this number, kept increasing it till this became 15 again. And this is automatically linked to 20% lower than this share price. So this is lower, and this is the net number. Got it? Got this? Abhishek, clear? Guys, some of you can at least put a video on, right? I can see from your faces if you're like getting it or not, right? We're just trying to be helpful here. Uday, you're there so far?
Yes, sir.
साला तुम लोग सब IIT कुछ क्रैक करके आते हो और एक एक्सरसाइज भी नहीं करते छोटा वाला इतना इजी है बिट्स कोई भी मतलब बिना IIT बेस वाला नहीं होगा मेरे हिसाब से and all of you like would have given so many exams. Okay, so now the second investor, so we have one layer of complexity is a convertible. Everybody is here. Hopefully we are adding the second layer of investors. Okay, now what is the second layer? This guy is saying I want to invest at a 25% premium, but my number of shares will be equal to, so I have a, let me expand it. Sorry. Okay.
Actually,
so this guy is saying whatever number you have, I have equal here. Okay, equal to this new Mr. Sorry. Actually, what? Okay. So I am saying that these two people will have equal shares. Right? So this new investor simply says, "Boss, जो भी करो मेरे को equal दे दो, बाकी सब ठीक है." Whatever is the math. So he's adding at a higher price. What is the higher price? 1.25%. Can you hear me?
Yeah.
You can hear me, right?
Yeah.
Okay. So this guy is at 25% higher price. So I made it 1.25. Everybody with me? So we have three prices. One is the original share price. Second is the 25% discount. And then somebody is coming at a 25% premium. Okay. Three prices. And all these three are linked to each other. The linkage is important. The absolute price is not important. Okay. So using this higher price and equal number of shares, price is higher, equal number of shares, I get a new cap table. Okay.
Right.
Okay, thank you. Now I have to adjust the ESOP. Remember, the ESOP has to be made from 10% to 12. So ESOP को क्या हुआ था? ESOP has gone from 10, and because of the convertible, so we have now convertible is 4.3%. These guys have 13% each, right? So almost 30% dilution. So ESOP has become 7 from 10, right? But now the investors are saying that we want it to be made to 12 again.
Hmm.
And you can make it 12, but we are not going to contribute towards it. तो हमारा जो 13% ओनरशिप है वो सेम रहेगा फिर, है ना, हमारा प्री मनी चेंज नहीं होना चाहिए. तो आप क्या करोगे, आप जाकर के in the cap table before all this calculation started, you will start adding like 1500 I add 10%. Founder has gone from founder were at 1000, from 1000 is gone to 55 to 53 चला गया. So I have to make it 2000 or something like 2000. Sorry, 2000. That's 13%, a little higher.
Okay.
What will I do? Sorry, hold on. Okay, something like this. But what's happening? These two guys have gone to 12.3. So कम हो गया ना कि आपने इस सबको बढ़ा दिया. तो आपको इसको फिर से लाना पड़ेगा 30%. And you'll have to reduce the price here and do this exercise again and again. Got it? Because these guys said, we told you to increase the ESOP beforehand. Of course, that's what they said. So if this was 1000, then I have 13% ownership in the cap table. So now I hold on to this. And so here, another method which could be interesting is that the existing investor also might refuse to contribute to the new ESOP. मैं नहीं करूँगा यार, तुम लोग founder दो. I don't want to participate in the extra cap table. मैं तो पहले ही बोला था 15 कर दो, तुमने 10 रखा. Now if somebody wants to increase, I will not contribute, right? So then you simply take plus whatever here and minus from the founder. So you do like plus 1000. So let's say you make it like 1800. You reduce 800 from this. There you get something like that. Because the founder is the only guy who's contributing toward the increased resource. Or both of these guys, the existing investor and the founder might contribute. So this is how it will go for you. Okay. Okay, guys. Any other methods to solve this? How do you guys do normally? I prefer the share price method. Just find a share price. So what we did here was, first step itself, we tried to find a percentage share and number of shares and share price. And once you get the share price, you keep that as an anchor for rest of the calculations. How many of you made a cap table? Like actually made a spreadsheet of a new round in one of your companies? Or take an existing cap table and done the math? How many of you made one cap table at least? Abhishek, tu kitni banata mahine ki? You don't make it?
No.
Okay. Okay, guys. Anybody made a term sheet? Anybody made a term sheet?
Yeah, but like debt term sheet. So.
Okay, who's this?
Ashita.
Ashita. Debt term sheet.
Yeah.
But you made one, right?
Yeah.
Cap table you haven't made one?
नहीं, उसमें हमें cap table नहीं बनाना पड़ता.
हाँ हाँ, आपका option होता है ना इसलिए.
Yeah, correct.
Nice. You guys are very happy nowadays. You can see that. It's only the equity guys who are not happy. Okay, anybody else has made a term sheet? Like made a term sheet and issued a term sheet? Sahil?
I understand few rights, but not all. But I
You haven't drafted a term sheet?
not end to end. But I understand.
So,
like
usually in your firms, who drafts the term sheets?
Mostly the partners.
Oh, the partners draft the term sheet. अरे भाई, मैं तो जब से अपूर्वा आई है मैंने एक term sheet कुछ भी काम नहीं किया मैंने तो.
Working on my first one now.
Oh, okay.
Yeah.
You were basically taking a template, existing template, and modifying it.
I've just started, so I really don't know. I'll have to do that.
Okay,
yeah.
super.
And if you are not the first check-in, then I mean, typically, if you are the last
you will
check-in,
have something.
Yeah.
Yeah. You just go up and down, right?
And if lead has already set the terms, then utna upar niche hota nahi hai typically.
That's also true. Absolutely. Okay. Now, next one we'll do is the term sheet. Okay. So I had given this funny thing to you, but it's probably as good as it gets. Okay. where the term sheet goes. So what is the most important thing in the term sheet? What is the most important clause in a term sheet?
The anti-dilution and the exit rights.
नहीं भाई ऐसा नहीं यार. Simple. No. The first thing is how much money and how much equity, right?
Yeah.
And the cap table, which is what was the first thing. Now second is what is the most important right? Anti-dilution is the most important right. नहीं रे, इतना important नहीं होता. What is the most important right? Liquidation preference.
Basically,
so
the
what is
exit
the
rights.
most? So yeah, I mean, see, one is the definition of the equity. इतना पैसा डालेंगे इतना equity मिलेगा, वो तो है, ठीक है. उसके अलावा what is the most important right?
Voting rights. Voting rights.
Which one?
Voting
rights. Okay. Yeah, possible. What else? So I'll give you a hint. This is a right that allows you to participate in the upside.
Pro rata.
So pro rata is the most important right, isn't it? If you really look at it, because if the company is dying, okay, doesn't do well, so neither will anti-dilution be useful. Voting right करके क्या करोगे आप? कंपनी बंद हो रही है, पैसा खत्म हो गया, तो क्या वोट करोगे? And liquidation preference also is useless. I mean, usually, okay, because most of the companies when they die, there is practically nothing to salvage. Bulk of the times you guys will be giving a bridge to the founder to close properly and avoid the negative press. So what is the and what's the point of the venture capital? Is not about protecting downside, right? A private equity player can think like that. The voting rights are important, veto rights are important, liquidation preference is important. But for a VC, pro rata is the most important, right? Because you keep getting more money. You can do super pro rata also. Okay. What is the second most important? Let's say the company is doing extremely well. Now, what is the most important right? Doing well run, because बाकी voting rights से कुछ मैं घंटा उखाड़ने वाला नहीं हूँ, तो उसको भूल जाते हैं.
Exclusivity.
But the company is doing well. What right do you want to have? Sorry.
Tag along.
Drag along. Okay. Why will drag along be a good right? You force the founder to sell.
No, like you said, na, ki company is doing good, so we would also get the opportunity to participate in the upside, maintain our stake or something.
That's pro rata. Drag along is a negative, right? Wait, what do you think? That you find a buyer for the company, okay, and then force the founder to sell. Will it work? What is the biggest worry in a good company? Let's say drag along can be useful sometimes.
That is really not a good company internally. Under says.
Or the founder will leave.
Founder vesting and lock-in
is leaving. Founder is trying to do secondaries. That's a big problem actually, right? Company is doing well, but founder is मेरा हो गया, मैं थोड़ा पैसा निकालता हूँ, थोड़ा इंजन खेलूंगा, थोड़ा other pounds में मैं एक घर खरीदता हूँ. Founder will have his own aspiration, right? Or founder might want to start another company. Have you thought about it? Okay, we have diluted. Look at the term sheet, right? I mean, we are diluting the founder so much. In the Bull Run Venture term sheet, the founder had 14% equity. That's all, right? So founder can very well say that I am starting another company. How do you lock them in? Vesting clause. Vesting भी हो गया 4 साल के बाद. अब क्या vesting है? क्या करोगे आप? You can't do much actually. Sorry. Founders have started multiple companies in parallel in India, and not much has been able to. You can't do much. Ola is an example, by the way, right? So, okay. Have you seen any buyback clause? Any of the term sheets? Anybody seen a buyback clause? You would have seen a term sheet, right? Ashita will have a buyback clause, no? Debt ka buyback clause nahi hota hai.
We have ROFR in our term sheet sometimes, but other than that, nothing. But ROFR be from a debt perspective, buyback to nahi hota.
Okay. Anybody has seen a buyback clause? No, usually not, right? Anybody has seen a tag along, right? What does it mean? Tag along? What do you mean by tag along? Sahil?
Essentially, let's say founder is selling some X%, then I have the right to tag along with him and sell the same percentage of my shares.
So let's say the founder is selling half of his shares.
Half के केस में तो मोस्टली पूरा ही सेल कर देना चाहिए, मतलब खुद पे भरोसा 50%
आपका अपना राइट तो नहीं है, आपका राइट तो नहीं है, आपका प्रोरेटा का राइट है. फाउंडर सेज कि आई एम सेलिंग हाफ माय इक्विटी, अभी मेरा हो गया है, अभी क्या मतलब 10 साल से चला रहा हूं.
for accelerated tag along, right? When there is a change in control.
ऐसा है क्या? नहीं, चेंज इन कंट्रोल नहीं हो रहा है. फाउंडर इज सेइंग आई ओन 15% इक्विटी because you already directed me. So whether it is 15 or 7.5 doesn't matter. No, I'd sell 7.5%. What do you do in that situation? Let's say he's selling at, let's say the company is worth $1 billion. He's selling for $75 million. 7.5%. What do you do? Is it a good sign for you or not a good sign for you?
Definitely not.
Come on, guys. You are not founder friendly. Nobody's saying it's good. Founders should be allowed to sell.
Maybe the first right comes to us as an investor that we can sell to that secondary part to another one before the founder.
Entirely before the founder. In what ratio? Founder बोलेगा मेरे को यार मतलब एंजल खेलने के लिए कुछ 5 मिलियन तो दो. ऐसा नहीं होता.
कुछ कि उसका majority stake, मतलब उसका stake significant रहे as compared to other investors.
How will you word this tag along? Has everybody seen a tag along? I mean, usually it's proportionate, right? That's what you see in. But if founder is selling half, what do you do? There's a dilemma, right? I mean, there's a hole that is there, isn't it? Okay. Has anybody seen a sunset clause? Anybody knows what is a sunset clause? So I'll give you an example. Okay. When we start, I have a veto right today as an investor. So Shruti has a veto right for IndiaQuotient by the virtue of her 15% equity. Now she has a veto right, which practically means that she can actually stop a new term sheet from happening, right? And then she will, every time next round happens, she dilutes. She goes to, let's say, 6%, 5%, right? But in every round, she has a veto right. She keeps bargaining. My veto right should continue. It should continue. I am at 3%, it should still continue. I am at 2%, it should continue. Is it fair to the company? Because a guy who has a veto right will never give it up. I don't sign the new agreement unless I have a veto right. I have a veto on this one. So you pre-agree on a sunset clause that if your equity falls below, let's say 5%, 7%, 6% at any point in future, because you're not participating further in the company, you're not using a pro rata right or whatever, in that situation, your veto rights will fall off. Okay. So let's say you didn't participate in the next 3 rounds, you will not have a veto right. It's fair, right? And this is important because somebody who holds a veto right will ensure that it goes from round to round, isn't it? So you have to pre-agree on a sunset clause the first time an investor comes in. Okay. What else do you want to know in this? Liquidation preference. I mentioned it here. There's a lot of memes around liquidation preference anyways, right? So what do you mean by liquidation preference? Anybody can define for me? Rachit Shah, who else is there? Aishwarya Gupta, I see some names. Dipesh Nathani. Guys, please define liquidation preference for me. Liquidation preference.
let's say the buyout is happening or some transaction is happening at a lower valuation than the previous round that happened, right? So the investor will get, I mean, it depends whatever they have, 1x, 1.5x, 2x, or the percentage ownership that they have, whatever is maximum. And this may be multiple options hote hain, participatory, non-participatory, that I don't really know now, but I have.
Okay. So, yeah, that's true. This is how it is. So the simplest liquidation preference is that you get something which is like, you get your money back first. I'll give you an example. We put $5 million for 25% of the company, let's say, okay, only in one investor, and then they're founders. Now the company is sold for $6 million total. How much would the investor get and how much would the founder get conceptually?
Depending on their share of the percentage share of the
company.
company.
So you're saying that the investor should get 1.5 million, founder should get 4.5 million.
Yeah.
Okay, na?
Yeah.
That's how it should get, right? So founder is a good incentive. Founder keeps the money in the bank, says कि यार अभी ये company कौन चलाएगा, इसको छोड़ो. Let's sell it. There is already 5 million in the bank. There is some value of the team. Let me sell the company right away. Then what happens to the investor? They get only 1.5 million. The company has 5 million cash, by the way. So to protect against this, we keep a liquidation preference, okay? Which is, if the company sold for 6 million, let's say $10 million, out of 10, 5 will go to company, and let's say if it's sold for $4 million, what do? Less than the amount invested. How do you split?
Entire 2
4 and 0, right?
4 and 0.
Yeah, you simply negotiate with the founder कि भाई तू भी ले ले 100, 200K, 500K. In one situation, we gave like $500,000 to the founder, right? Out of probably out of $6 million of exit, sorry, 3 million of exit, 6 million investment. We gave $500,000 to the founder because you want the founder to cooperate with you, get something out of it. Plus, the founder has to be say that you're a friendly founder, talk to your LPs, tweet about you. तो उसके लिए आप थोड़ा उसको पैसा दोगे. You don't want to give, but you will give some.
I'm just curious as to, so I've seen a term sheet where they ask for 1.8x lick pref, right? So
1.8 is like, yeah, it's 2x is possible. And with a fair reason, to be honest.
Yeah.
Because I am not coming in just to do a 1x, 2x, right? I want you to keep working with it. And I want you to work hard to at least double the value.
And this will probably happen at the later stages, right? When you have like Series D, Series E.
Yeah, I mean, particularly I'll give you a situation where somebody puts a $100 million round for 10% equity. Okay. And he's the only investor. Everybody else has put maybe 10, 20 million before that. Right? This guy's bringing all the money, pricing it very high. He'll say, if you sell the company at 500 million, I don't give you only 100 back. Give me 200 back. I'm pricing it very high for you. He can negotiate. This used to happen, I think, till 2015, 16. And this was a very common thing. And then suddenly, everybody was trying to be founder friendly on Twitter, and these conditions went away. But it was very common. 2x was very common.
No, I just heard of a term sheet given on that 2x this thing, so which is why I was curious.
Oh, now in India?
Yeah.
Is it tier 1 investor or somebody new?
It was a Series C round of a company, but the founder said no because of this issue. So,
yeah, founders are smart. But then he may not have any other option, by the way, okay? Because it's a very common term. So, okay. Any other term you want to understand about?
Hello.
Anything, guys? I'm here. Please ask. Abhishek, you're saying something? No?
Let's say for that example, the exit is happening at 8 mil. So 1x
5 and 3.
And 3. What is participatory, non-participatory? I mean,
participatory is again an older trick, which is worse than liquidation preference in some ways. 2x lick pref. 2x का मतलब है कि investor will get 2x minimum, right?
Right.
Participatory is a dangerous term. Participatory says that at the time of liquidation, I will take my initial participation capital out and still participate. So every time the company sold, let's say I invested 5 million, 25%, that's 20 million post money.
Right.
Let's say the company sold for 25 million. 5 million बढ़ गया है. So this guy will say, I will take 5 million out. So 25 minus 5. And I take 25% of the remaining also.
Okay.
So I take 5 plus 5. The company sold for $50 million. The money has doubled. I take 5 million out first, and out of the remaining 45, I take another 25% out. So it's like a perpetual extra equity, effectively increasing your ownership. Even in a good scenario, even if it's like a 500 million exit, this guy will first take 5 million out, and of the 495, he'll do this thing. So there are participatory liquidation preferences where it taps out at 2x. Keep us, whatever you do, you will not take more than 2x of your this thing. Only till then, participatory will work, otherwise it will not work. There is some literature on the web. There's some scenarios. I have a deck around this pref participatory, non-participatory, 2x. I can happy to share with you guys.
Even if the exit is happening at less than 20 million, let's say for example of 8
let's see the exit is like let's say $10 million. This guy will say I'll take 5 and 25% of the remaining 5 also.
1.25. Okay.
This is very common. I have been through this term sheet. An exit like this where the term sheet was given in 15 and the exit happened in 17. Like participatory like pref, yeah, from a good fund in India. And Sequoia, Westbridge, they used to give this kind of a term sheet as late as till 2011. And participatory, right? 2x, I used to do 2x. I would say I am doing a better one. I'm doing 2x but not participatory. But we started doing 1x lick pref only in 14 broadly, and we were one of the first ones, and the market sort of settled around 1x lick pref in that era. Okay, guys,
got it.
I can take 1 or 2 more questions or comments. Otherwise, I think we are done. Okay, any other questions, comments? Has anybody done on the whole fund multiple? This first exercise that was there.
Anand, I just had one question. Have you
this one? Yeah. Yes, Harsh.
Yeah. So I was just wanted to understand about the put option. There are also put option clauses in term sheet.
So, yeah, put option to nahi hona chahiye. That's like a debt. You'd rather go to Ashita and take a debt from her instead of giving a put option. Put nahi hona chahiye. Matlab put kya matlab hai?
But it's not effective, right? Put options.
It's not effective, but it's just a legal liability on the founder. It can kill the company. What happens is somebody who owns a put option will squeeze you. Because see, look at the guy who's giving a put option. That's the point, right? Uska mindset kya hai? Who will think of a put option? Somebody who is not really treating this as a venture deal, right? You don't want to work with that guy. That's the point. He will squeeze you. He will do something or the other. Go after the founder's life. Insist ki ye karo, wo karo, varna main put karunga. Always avoid. Like, just stay away. Rather shut down the company and start again. Even if you're an existing investor, settle for low valuations, settle for anything, but don't do a put option. The mindset of the guy who gets the put option will kill the company. I haven't seen a single guy who talked about a put option ever really helping the company. Usually are very negative. Angels particularly, they insist on put option that they can be very, very bad.
Put option at a minimal, like a $1 value helps to write off the company.
That's okay. $1 put option is a very useful one. We are inserting that in our clauses, right? Because this is one problem that many people will now face. They will want to shut down the company, get out of the company which is shutting down, and they will not be able to get out. So put option at $1 at 10 rupees is a very useful one because you get out of the company and get rid of the liability. It's a very useful thing. But that's about it. Put option at any other price is absolutely unfair. And it never works. Okay. Anybody has done the fund exercise? Okay, guys. So I want Okay. I want to know what is your fund size, Harsh?
So mine is a little different. I'm from Brand Capital, so we don't have fund size.
Rachit, what is your fund size? No? Okay. No, we can't hear you, Rachit. Sorry. You're on mute. Okay, we'll do this exercise for $100 million fund. Has anybody done this? Isn't it? Okay, usually in a fund, how many investments will you make? Just stay with me. Rachit, how many will you make in a fund? Sorry? We can't hear him, right? Yeah, sorry.
Yes.
Okay, Rachit, we can't hear you properly.
Between 20 to 25.
25 companies. Let's take this, right? 25 companies in a fund, 30 companies in a fund. Let's make it easy, 30 companies in a fund. How many of these will go to a unicorn level? How many do you think in a good 30 company portfolio will go to unicorn? Jaldi, quickly. Rupali, Vineet, कितने जाएंगे? 3. Okay, everybody saying 3. Good. 3 companies go to unicorn. How much equity do you have in these 25 companies on an average? Initial equity. 10, 15, 20. How much will you have? Initial ownership.
10,
average.
15%.
Average
15. Should I take 15%?
Hmm.
And then you'll put some more money. But you will dilute. By the time it reaches unicorn, कितना dilution होगा? आधा हो जाएगा?
Easily.
You will have 7.5% left in this unicorn, right? 3 companies will become a unicorn. Each one of them you have 7.5%. Okay, how much money do you make if it is 1 billion value? You make how much? Million, right? One unicorn gives you 75 million. 1 billion value. So 1 billion unicorn gives you 75 million. 3 into 75 कितना हुआ?
225.
225. What is the value of the rest of the investment? Let's say the rest of it is 1x. So you get some 75-80 million for the rest of the investment. Let's say. Fair enough? Or am I wrong in assuming? Fair assumption, ना? 3 यूनिकॉर्न ऐसे भी नहीं बनते हैं और 3 बनेंगे, बाकी वालों पे मल्टीप्लाई तो नहीं होगा, ऐसा तो नहीं होगा, राइट? तो बाकी का सबका 1x रहेगा. Some total, some you will write off. Like half will be written off, half will do 2x, 3x. Fair enough? So you get 75 million from each unicorn, that is 225 plus another 75 million from the non-unicorns. How much is the total? 300 million. 300 million. It's only 3x. If you would make it 5x, how many unicorns do you need? You need your unicorns to double, right? Each unicorn should be a 2 billion unicorn, not 1 billion. Then you will make 150 each, 450 million, and some more. That basically means the market cap of a portfolio should be 2 billion into 3, $6 billion. बहुत सारे फंड है. कितने फंड होंगे इंडिया में 100 मिलियन वाले? 100 funds. इतना मार्केट कैप है क्या भाई इंडिया में? And everybody releases India, if everybody has to do a 5x fund, India will have to produce like what 50, 100 unicorns every year, right? Isn't it? Typically एक यूनिकॉर्न के अंदर कितने इन्वेस्टर होते हैं? 4-5. So it's tough, right? What do you guys think should be a good return from a fund? From a VC fund? In general, what's your concept?
4x and above.
4x and above. Okay. So what is the most important factor to optimize? If you want to really do very well as a fund, you want to have higher number of unicorns, which you don't know, you can't control, right?
Ownership.
You want to optimize ownership, right? That's very important. You want to increase the number of investments. That'll help, right? The ratio may not, but increasing the number of investments can help. But the problem is if you start doing more investments, you're not selective. Your mind changes, right? It's a mental problem, right? You say, well, I'm investing in every company that I see. And then you can't maintain good ownership also if you're investing in too many of them. So there's a balance. You want to have more shots at the goal. You want to do 35, 40 companies, but you also want to have high ownership in each one of them. This is the dilemma. So this is the broad problem of the fund management, and this is what your partners are trying to solve. Which is why, if you are $100 million fund and somebody comes to you, a return founder, and says that I am raising $12 million or $70 million pre, because the returning founder, like a unicorn founder, what do you do with a $100 million fund? Do you participate or not participate? Let's say you're getting 3% equity in this company by putting 3 million. Do you do or no? This is the question. Because from this company to make $75 million, which you're expecting from a unicorn, this company has to be worth $10 billion. Because your ownership is 3 only instead of 15. Right. So do you do investment in this returning unicorn founder or not? You don't? This is a good brand name, good investment. Why would you stay away from it? Okay. This is food for thought. This is a tough one. But yeah.
Even if it becomes really large, I wouldn't.
You will not have. Yeah. You will still not. I mean, let's say it becomes a unicorn, you'll probably have 15 million, 20 million to show for it.
Yeah.
And not really moving the needle for you. Okay?
Yeah.
So either you say I will put $5-6 million in this, which is again a big chunk for a company which is still on paper. Unless you take a very large ownership, it's not worth it. So yes, this is a dilemma. And this is what we're going to battle, right? So if you think what your partners are doing and what your fund is doing and all that, this is what they're doing. This is the biggest problem. And you can't increase the number. You can't actually, as a firm, we've tried to go from 30 to 40 investment. It's a stretch. Your overall quality might drop. You're better off doing a certain number of investments. Okay. Thank you, guys. I have to leave. Rest at home. Bye-bye.
Thanks, Anand.
Thank you.
Bye.
Bye.
Thank you.
Thanks a lot.
Thank you.